Hello, everyone. Welcome to Small Biz Tips. So today I have a gentleman. I saw his post on LinkedIn, I believe a few months ago, and I was like, how is he doing this? So I'm like, I gotta reach out and I gotta bring him in. Jared, what's going on, man?
Hey man, thanks for having me. I really appreciate it.
Thank you for jumping on. Appreciate you as well, brother. So before we get started on the good stuff, who is Jared?
Yeah, my name's Jared Johnson. I do SBA lending. So I've been doing SBA lending for about 18 years. I specialize in business acquisitions. So when somebody is buying a business, we provide the financing for it. So typically do about 70 deals a year,
Wow.
heavily focused on trying to teach people how to buy a business or even how to sell a business and provide the
Mm,
financing for it. So
wow. First, congratulations.
thank you.
70 deals a year? How? There's a lot of people that try to do five.
Yeah, no, I have a good support team with me. I have three people that help me every day
Mhm.
and I've been doing it for a long time. So you get kind of used to it and gets a little easier. You kind of learn all the tips and tricks on how to get it done. So.
So let's talk more about that, right? Because we hear now there's a lot of people preaching about buying businesses. And they always say, you can put the 10% down and 90% from the SBA loan. Tell us more about the SBA, because I think there's so much to it that a lot of people don't know. So give us a little background, about different type of SBA deal that you normally work with.
Sure, yeah. So probably the biggest thing for people to understand is that with SBA lending, it is not a grant program.
Mm,
There's no grants that are going on. The SBA is not making the loan. So
okay.
when it comes to the actual lending program, the main one is called the 7A program.
Okay.
And basically how it works, the bank makes the loan.
Okay.
And most of the banks are what they call a preferred lender. So they make their own decision whether or not they're going to approve the loan.
Mm-hmm.
A bank is required to follow all of the SBA guidelines. And as long as they do that, if anything happens to that loan in the
Mm.
future, so basically if the person that borrowed the funds stopped repaying it,
Yeah.
the SBA would guarantee that loan. And typically it's 75% of the loan.
Okay.
So as long as the bank does what they're supposed to do, follows all the guidelines, all the rules, then the SBA, which is basically the federal government, would step
Yeah.
in and repay 75% of that loan to the bank. So that's something that a lot of people don't understand. We get a lot of people that say, so can the SBA do this? And we have to kind of try to get them to understand it's not really the SBA making the decision. Now there are different kind of levels of
Mm.
lenders. There are some that do send everything off to the SBA for approval,
Yeah.
and that's not a very common thing. Most
Okay.
lenders are preferred and they're doing it themselves. So, and then from
Interesting.
there, there's all different types of SBA lenders and different types of lending that you can do within the SBA. So most common would be commercial real estate,
Okay.
purchase or refinance. Of course, you can do construction loans.
Mm-hmm.
There's tenant improvements, working capital, permanent working capital, debt refinance. And then what I specialize in is business acquisitions. So when you look at the overall environment with SBA lenders, there's several thousand SBA lenders, but there's only a very small handful that actually do business acquisition lending.
I
Most
didn't
banks
know that.
consider it the most risky type of lending you can do.
Oh,
So, yeah, so you kind of become more of a specialist in
gotcha.
that one. And then different lenders are kind of known for different things. So, we all have to follow the SBA rules, but then each bank kind of has their own rules or appetite on top of that.
What is like high level wise? What are some of those SBA rules that, you know, you guys gotta follow?
Yeah, so the main thing is that, it has to be a for-profit business.
Okay.
There are size standards that we look at. Don't usually run into them very often. There's a certain amount of profitability or revenue that you have to stay under. It's fairly difficult to get to be that large. And then from there, any individual that owns 20% of the business has
Mm,
to provide a full personal guarantee.
okay.
So they're basically saying that they'll do whatever it takes to repay the loan personally and, of course, through the business. And then there's also collateral requirements. So depending on the type of loan and what
Yeah.
it's being used for, sometimes if there's a shortfall in collateral that the bank has, they
Yeah.
also are required to take a lien of anybody's property if they own real estate.
Oh wow.
Yeah. So
So it's
outside of
nice.
that, it's about 250 pages worth of other things that would take all day to talk about.
I think a lot of people make it seem so easy. Like, hey, you just go talk to this owner, get an investor, get your 10%, and then SBA will cover the other 90%. Have you seen a lot of, I guess, people don't qualify for the SBA that they thought they will? What has been some of those common, you know,
Mhm. Yeah, I would
unqualified?
say, yeah, and I'd say from doing this for so long, 15 years ago when we would do acquisition financing, it was very small loans. And it was typically somebody that was maybe a general manager at a business
Yeah.
would be buying that business, or they've operated a business like that and they want to buy another one. And it wasn't very common. And we had large down payments, usually 25, 30%.
Mm,
It was very, very uncommon to do a loan over $2 million. Even $1 million felt like a big transaction back
okay.
then. As it's kind of gotten more popular,
Yeah.
especially with people kind of taking on the whole
Yeah.
and then also ETA, so entrepreneurship through acquisition,
Yeah.
has become very popular. Even a lot of the major business schools are now offering that as part of their MBA program. So you have a lot more people that got interested in buying businesses.
Hmm.
And so with that, the banks have gotten a little bit more comfortable with it. And then the SBA as a whole has adjusted their rules.
Got it.
So you are required to put 10% down. There is actually ways to do less than 10%, but the majority of the transactions we do are 10% down.
Okay.
Um, and you do have the ability to get an investor and use that towards that down payment requirement. But I
Hmm.
would completely agree with you that there are a lot of people that are kind of running around talking about it, making it sound like
Mm,
it's really easy, and it's really not. And it's also a little scary because operating a business, as you
yeah.
know, is very difficult. And they kind of try to make it look like it's, super simple. You just buy a business and it just
Yeah,
runs
it's gonna
itself,
run
and you
on its
throw a
own.
manager in there. And we're like, no, that's not how this works. It's actually really difficult. So it's a little concerning. I would say it's absolutely easier now than it
Mm,
was 5, 10, 15 years ago. But the individual that's looking really needs to understand that
yeah.
when you're operating a business, it's not super easy to operate the business. But we're still very, you know, uh, kind of tight on what we're looking for.
Hmm.
The main thing we're going to look at is the seller's business first and foremost. We want to make sure that it's priced accurately. There's
Gotcha.
enough cash flow from that business to support a
Cover the
loan.
loan. Yeah.
Yeah, and then we're going to look at the individual as well. So we want to find somebody that has some experience. Usually they need to have some capital, some liquidity,
Gotcha.
have good credit, all of those kinds of things. So it's really not as easy as they make it sound. And they're the lenders that have been doing it for a long time. We really
Yeah.
know how to look at these deals and we really understand what we're looking for. So we're not going to just kind of let a random person come in and buy a business that they shouldn't be operating.
I'm glad you said that, right? So let's say, for example, you know, Joe Schmo want to buy a HVAC company, right? Would it
Mhm.
make better sense that they have all the financial in order, all the document in order, and then send them to you guys first to say, hey, does this even qualify for potential SBA financing before I even, trying to get this deal done?
Yeah, absolutely. That's usually one of the first things I'll tell people. And one of the biggest questions I get is when do I want to be involved as a
Yeah,
lender? And my answer is always whenever you're ready, but I would rather be there sooner rather than later. So
yeah.
the sooner that I can take a look at what you're buying, I can usually help um, get the buyer to understand what they're looking at and whether or
Hmm.
not it would be a loan we can do. And then as they're putting together the all of the transaction documents, we can make sure that it's going to comply with the SBA guidelines, and then also that the numbers frankly work based on the structure of the transaction. So we're always happy to take a look at the stuff up front, and it does sort of cut down on a lot of issues and then kind of some of the timing on the back end.
I'm glad you said that too, because let me ask you this. What's that threshold limit for an SBA, right? How much is it 5 million? Is it 4 million? Like, what is that threshold limit? And how do you normally see deals being structured for it to actually be SBA approved?
Yeah, so we're typically looking at transactions between 500,000 and 5 million for the
Okay.
loan portion of it. We can do larger transaction size, but the amount that we can do as far as the loan caps out
Yeah.
at $5 million. dollars. So most of the time you're going to have a loan amount. We're going to
Hmm.
include working capital, or I'm sorry, a purchase price, and then we're going to
Yeah.
include working capital. So we really look at the business and see what's necessary to operate the business. We
Hmm.
really want that buyer to take over the business and have more than enough capital to get the business,
Flourish.
under their feet. Yeah, there's a lot of things that come up as far as expenses and whether or not they're going to be taking the accounts receivable, the inventory, all of that kind of plays into it. So we'll include that. We'll include any closing costs, and then there's a
Gotcha.
fee that gets paid directly to the SBA, and we'll
Huh.
include all of that, and then we'll typically finance 90% of that entire project amount.
Ah, I get it. I did not know that. So that 5 million, it encompasses everything, not just the loan for the business.
Correct. Yeah. So it'd be 90% of the total project. So if you had
Gotcha.
a $4 million purchase price and we included 500,000 in working capital,
Yeah.
another, 100,000 between the fee and the closing costs,
Yeah.
we would take that whole amount and then we would finance 90% of that.
That amount. Got it. The only, how long do you, because that's another question you hear, right? Oh, SBA takes forever. You know, what is the shortest transaction time you had and the longest?
Yeah, the shortest I've ever done, I think, was probably around 25 days. And
Really?
that's really moving. And normally when there's a case like that,
Yeah.
they have already done all of their due diligence. They most of the time know the buyer seller, know each other. They say,
Mm-hmm.
hey, we want to really push to get this done. We'll go ahead and kind of start working on the closing items and a lot of order everything we can up front while it's going through
Mm-hmm.
underwriting. I actually don't really recommend doing that if
Mm.
you are just kind of, working on a normal transaction. It doesn't give you enough time to really understand the business, understand what you're buying, do any kind of due diligence to make sure
Mm-hmm.
you're not getting yourself into any kind of trouble.
Yeah.
And a lot of times when people are rushing through like that, they make mistakes or they miss something.
Yeah.
And it can be a very, very costly mistake, down the
Yeah.
road if you buy something for 3 or 4 or 5 million dollars
UPG
and then
money.
realize that, yeah, exactly, and then realize there was something there that maybe would have stopped you if you took your time. And then
Wow.
to answer your question, the longest I've ever done, I don't know, probably 2 years or something. I mean, there's been transactions where the buyer and seller get in a fight with each other, or something happens during the due diligence, and they kind of go back and forth with each other over and over, put it aside, start on it again, and yeah, it's
Wow.
obviously that's not normal, and we don't try to do
Yeah.
that at all. The average is usually about 60 to 70 days is pretty normal.
Gotcha. Gotcha. I'm curious to hear, since you've worked with so many people, you've done so many deals, some stories, right? What were some of this like throughout your career was like, wow, this was an impressive deal. I like how the structure is. I like how we're able to fund it. Can you share one of those examples with us?
Yeah, I mean, I'd say some of the stuff that's been kind of fun is working with professional athletes,
Okay.
celebrities. That stuff's kind of fun. I've done deals for friends. I've helped friends sell their business. Like that. That stuff's always really fun. Yeah, I've done just kind of off the wall different types of businesses. I did a deal for a guy that was buying a company where they go to your house and take lice out of your hair. So that was kind of
Wait,
interesting.
what? That is
Yeah, yeah. And it was very profitable. So somebody would call and say, "Hey, my, son or daughter got sent home from school. They have lice."
wow.
They have contractors all over the country. They show up to your house. They take all the lice out. They clean your house. They do everything they can, charge a fee, and they're on their way. So it's a very interesting business
That
model.
is.
Yeah, and then some of the fun stuff is, seeing people buy a business and
Mm,
then 5 years later calling me saying, "Hey, I'm selling, and I bought it for 3 million, and now I'm selling it for 10," and that's
mm.
really fun to watch. So we
That's
get some
amazing.
stuff like that, and then just watching people kind of live out their dream, right? A lot of people
Yeah,
have a dream to buy a business, but then you get to see it on the other side too. You have somebody that maybe that's been in their family for 3 or 4 or 5 generations. They've
yeah.
built it and they're going to sell and they're going to retire and they're happy to hand it off to somebody that's going to kind of take it to the next level. So it is definitely fulfilling. It's not always tiring and and a lot of work,
No, no,
but
I love it. I
yeah.
love it. And I'm curious because I hear sometimes that when, let's say, for example, I have a marketing background, and let's say, I had a marketing company and I said, you know what, I want to buy another marketing company. How can I leverage the SBA to make that acquisition happen? Right? And do I still need to put 10% down, or can I put 5% down? Or is there a time where you don't put no money down with the SBA?
Yeah, that's a great question. So in November of 2023, they amended the rules and changed it so that if you have an existing business, and the
Mm-hmm.
way that they look at it is the NAICS code on the tax return. So as
Gotcha.
long as you're buying something in that same industry, then you
Yeah.
do not have to put anything down.
Wow.
So there's a couple little rules with it, like you have to use the existing entity that you have to buy the
Hmm.
assets of the other one or the stock of that business. And then it needs to be the same ownership when you do the transaction. But yes, you could do 100% financing to do it that way. And we've helped lots of people that will grow their business that way. They will buy one or two businesses in the same
Mm.
industry, and then they can buy more by growing and not having to put any money down. So we usually want to see that it's been 6 to 12 months or so since the last transaction,
Yeah.
sometimes longer, depending on how the business is doing. But it's
Yeah.
an excellent way to grow your business because, as you said, if you already have a marketing company, then you
Yeah.
can usually recognize a lot of cost savings
Of
that
course,
the
right
other
away.
business, yeah, you wouldn't have to incur those once you buy the business. So it's a great way to grow and expand.
I'm glad you said that, right? Because now you can be a little bit more creative and you say, you know what, I'm a business owner. Maybe I'm running a IT company, and maybe I want to buy another IT company to go quicker.
Hmm.
So I found another IT company that I want to buy because the NAIC code matches. I reached out to someone like you and said, hey, listen, here's what I'm trying to do. How can we make this deal happen? 100% financing. Now, is there, for example, does the current IT company, let's say I own an IT company doing 1 million, but I want to buy one that's 5 million.
Hmm.
Am I still able to do that?
Yeah, there isn't a restriction or
Yeah.
any kind of rules or regulations on that. Now, that would probably be fine if you tried to go from a really small, 200,000 in revenue to 5 million in revenue. That
Yeah.
might be too big of a jump. So we kind of look at it and just try to use some common sense. But
Gotcha.
if the existing one is doing great and that individual has, good experience, maybe some, a good amount of cash or something
Yeah.
saved, then we would absolutely take a look at it.
Wow. This is fantastic. I'm glad you shared that. Have you seen those deal close faster than others?
Sometimes, most of the time when we have something close quickly, it's just them working together and
Gotcha.
kind of working, making sure they're on the same page from start to finish. It's very much an emotional game between the buyer and seller, right?
Yeah.
And it's hard to keep them kind of on the same track.
Yeah. Yeah. Yeah.
Um, they may be really excited together at the beginning, and then something happens, the seller starts to get a little bit of remorse or it starts to hit them that they're selling their
Mhm. Yeah.
business.
Yeah.
And then the buyer starts to get a little nervous sometimes that, oh my gosh, this is a lot to take on.
Yeah.
Can I handle it? So when they're getting kind of
Psychological.
off the same wavelength, then it can get really frustrating and challenging.
We didn't get to do that in the beginning, but can you share a bit more about your background? How'd you even get into all this?
Sure. Let's see. So I started SBA lending actually my senior year of college. So
Wow.
it's been about I think 19 years. I can't remember. I don't know. It's hard. It's hard. It's weird to say that. But yeah, I got an SBA lending. I actually started on the real estate side. So all I did was
Mm.
real estate loans. And then a couple years in, I did a couple of the business acquisitions, and I really enjoyed it. It's very, very challenging. And
Yeah.
you have to know a lot about a lot of different industries. And then you have to know the structure, how things are going to work. So it was challenging and I enjoyed that. I also realized that not a lot of people were doing it. And so it was something
Mm.
good to get into, to become an expert in. And I just kept pushing myself to learn more and kind of get more involved in it. Actually, I've bought two businesses along the way as well.
Let's
One of them
go.
I sold
Congrats.
my ownership in, and the other one I still have, but my wife runs it. And so
Let's
it's been kind of
go.
fun to do that as well. And it gives you a different perspective.
Of
And
course, because
it
you've
also
been through
makes
the
it a little easier.
process. you
Right,
know?
right, exactly. And then you understand it more. When I'm talking to somebody and I'm going, hey, this is what could happen, and I'll explain to you why, because it happened to me,
Yeah.
then it's a little bit easier for me to get them to kind of recognize that and understand it.
Yeah, because you've been to both sides of the table, so you're
Yeah,
giving them your perspective as an owner, which,
right.
that is super valuable insights.
Yeah.
Mhm.
Yeah, I've tried really hard over the years to be more than just a lender that takes
Yeah,
your information and gets a loan approved and says thanks and moves on. I try to really help and kind of do a little bit more advising or at least try to give some kind of guidance one way or the other and make sure people are set up for success.
I love it. I love it. If someone want to work with you, how do they
Mhm.
reach out to you? What's like, how do they do that?
Sure, yeah. If you want to send me an email, my email is pretty easy. It's just first letter J and then Johnson
Hmm.
at first IB. So it's FIRSTIB.com. You could also look up my podcast is called Before You Buy or Sell a Business. So you
Nice.
could look that up. Same with my YouTube channel. So there's some info you could find on there.
I love
It's
it.
usually probably the easiest way to find me.
Jared, thank you for your time. One last question before I let you go. For all the small business owners out there that listen to our pod, what is that one small biz tip you can share with them when it comes to funding and acquisition?
Yeah, I would say, don't be afraid to ask for help. I feel
Mhm.
like a lot of people try to kind of do everything,
Yeah,
and not nobody will ever be, fantastic at every piece of the business. And I think it's totally fine to reach out to somebody and ask for some help if you're not an expert in that
yeah.
field. Ask them, for advice, and obviously constantly be trying to learn new things so that you can get better at everything you're working on.
Wow, guys, reach out to Jared if you're looking to get a deal closed and need some financing for your acquisition. Thank you for coming in, brother. I really appreciate you.
I appreciate you having me on. Thank you so much.